FOMC is happening tomorrow, and if you're not paying attention, you'll be missing out. Just in case you're unfamiliar, FOMC is an event that happens each month where the US Federal Reserve, the department in charge of monetary policy, decides what the new interest rate should be. This is always a huge and important event that effectively shapes the course of the dollar's direction, and tomorrow's interest rate decision might be the most important news release we've had in a long time. Here's why. We're still seeing the effects of the pandemic in the economy when it comes to inflation and interest rates. Inflation in the US hit 40-year highs at 9.1%. 1 year ago in June 2022. The Federal Reserve had just begun its series of rate hikes to try and bring inflation down. You see, raising interest rates is one of the key ways the Fed tries to lower inflation. By raising rates, on average, people are borrowing less money from the banks, spending less, which in return slows down the flow of money throughout the economy and helps drive inflation down. So for the past 12 months, we've seen nothing but rate hikes. Not every single month, but we haven't seen any rate cuts yet. Now, here's where things get really interesting. So far, the Fed's plan has worked, and it's worked pretty well. We've seen inflation drop consistently each month, sometimes by a little and sometimes by a lot, but dropping nonetheless since they began this massive rate hike cycle. Today, on Tuesday, June 13th, the US had its monthly CPI report, where the new inflation rate number is announced. The inflation rate was forecasted to drop a solid 0.8%, but came out even lower than that, dropping 0.9% down to an even 4%. So we know that the Fed's long-term goal for inflation is 2%. They believe 2% is a healthy inflation number for both the US economy and everyday Americans, and we're so close to meeting that goal. At some point, the Fed will have to begin rate cuts. Now, we are currently forecasted to remain unchanged at 5.25% interest rates for tomorrow's FOMC. And according to the Central Bank Forecast tab in the EDGEFINDER, those cuts aren't supposed to begin until late next year. Same thing with hitting the goal of 2% inflation. In fact, the central bank forecast predicts that we could see further rate hikes before gradually coming back down. Could the Fed test the waters by cutting interest rates for the first time in over a year tomorrow? Will we stay on course and remain unchanged, which is currently forecasted to happen? Or could the Federal Reserve follow behind both the Bank of Canada and the Reserve Bank of Australia, who both had surprise rate hikes just last week? Tune in tomorrow at 1:45 p.m. Eastern Time right here on the A1 Trading YouTube channel to find out as we live stream the spike and do analysis immediately following. Also, let us know in the comments down below what you think is going to happen tomorrow.
So tomorrow we have some information coming out from the Fed, which will be pretty impactful to markets, but perhaps in a way that not as many traders are paying attention to, which is tomorrow interest rates are very much expected to stay as is, meaning not to rate hike any further and instead to pause. The Fed has been very much consistent with its guidance as to what the markets are expecting. They generally have been doing. That story going into tomorrow is pretty much well played out. It would be a very surprising change if they did choose to rate hike in the June 14th meeting, but most likely they're going to pause. What's more interesting and what people really need to be thinking about is what's next after we pause tomorrow. It's not necessarily a pause and we're certainly going to start rate cutting. It's a pause and we're going to see what the data brings forward. So people are going to be paying attention to, of course, tomorrow's PPI numbers. People are going to be paying attention to upcoming CPI numbers. Core PCE is a big one. We're going to be looking at economic numbers, and the Fed's going to very closely watch this. So tomorrow's meeting, I think traders need to be aware that there will likely be volatility, but the volatility will mostly come during the follow-up to the rate decision, the meeting itself, where they perhaps talk on forward guidance and any clues that could hint at what they may do in the July meeting. By the time these Fed meetings things roll around, usually the market's pretty confident as to what they're going to do. Not always, but in many cases. And it is now up to what starts coming out of economic data going forward to drive prices higher or lower. So for me personally, I'm pretty much in the pause camp not just necessarily from this meeting, but I think that until proven otherwise, it does seem like the inflation war, there is victories being won there. And until that changes, I'm generally going to be optimistic on outlook, meaning, declining inflation leads to potentially a stronger stock market, potentially gives some lift to gold, that sort of thing. So that's where I'm at with things going into tomorrow. But again, the real focus will be during that meeting, the guidance going into July's meeting.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.